Hello, hello. Welcome everyone to our weekly recap. Thank you for joining us. This is another episode of the Defiant Print team going over the biggest stories in DeFi and crypto of the week. I'm Cami Russo, the founder of the Defiant. We have YYC Trader here with us, head of news. Owen for now, Jeremy Nation, our staff reporters. It was a big week in DeFi and crypto. Some of the biggest topics I will be covering: the DOJ charged Tornado Cash devs with money laundering. Roman Storm was arrested and released on bail. Another big trending topic these past few days has been Friend Tech. Is it a legit uh, trend that's sparking off social fi, or is it a fad? We'll look at different opinions on that. We also covered combined layer 2 throughput is outpacing mainnet by 400%. So looks like scaling is happening. And Uniswap has processed more spot volume than Coinbase this year. Like CZ said, quoting our story, DeFi is taking over. And finally, OpenSea gives up on enforcing royalties. Bad news for NFT creators, and Yuga plans to block the marketplace. Let's start with Tornado Cash. Owen.
Right. So everyone is still wrestling with what this means, but yesterday the DOJ charged two of the three founders of Tornado Cash, Roman Storm and Roman Semenov, with money laundering and violating sanctions. And each charge carries a maximum sentence of 20 years in prison. So yes, this has been an ongoing saga. Tornado Cash is probably the most targeted crypto protocol in DeFi. And as most people listening probably know, Tornado Cash is a mixer. So that means you can send assets in and get assets out and obfuscate from that they came from you. So that's what we're dealing with. A lot of DeFi is trying to understand what the ruling means. Tornado Cash has been offline, I think, since the service itself was put on the sanction list almost exactly a year ago. And we've been wrestling with this idea of whether code is speech, what kind of I mean, are people responsible for what people do with the smart contracts you provide, and wrestling with, if the Tornado Cash founders are hosting a front end for code, are they responsible for the money that runs through it? So all of those issues are going to come out in more subtle forms than I can speak to, but it's definitely, what we're learning from a high level is the DOJ is by no means looking the other way in terms of where Tornado Cash is. And obviously, as the case moves forward, it'll be interesting to see the arguments that are made. And I think it has ramifications for the rest of crypto, but obviously it does. But there's a way in which, Tornado Cash is a very unique protocol in that it is geared towards privacy and has been used by a hacking group to launder a bunch of money. So it's not quite the same as a Uniswap or a Maker or an Aave, but it does. I don't know. It brings up a lot of issues, which I know people can speak to very eloquently about what privacy means. But at the face of it, part of me is like, yeah, well, if people are using this to launder, hundreds of millions of dollars, like, we need to figure out how to prevent that. I can understand why the government would want to go after a service like that. So that's where that is currently.
if I may say, I think it's interesting because on the two sides of this, you say, you've got the government saying this is a service that provides opportunities to launder money and to obfuscate, where these, illicit funds are coming from to fund, all sorts of illegal activities. On the other end, the US dollar in its cash form is very much the same vessel. So there's this kind of interesting parallel there. The other thing I would say is we've got an individual who's just built a privacy protocol, and privacy protocols definitely have a place. It's sad that by virtue of the fact that they built this thing in public and made it accessible to anyone, much in the same way the US dollar is, that they are now being put up on, sort of like the pedestal as, someone they want to make an example of. And it makes me question, how others are going to be able to approach building privacy protocols in public, given the capacity for any tool to be used maliciously in this ecosystem.
I think that's...
Oh, sorry.
Go ahead, Wei.
I think if they hadn't launched the Torn token, they would have been fine. That basically gave regulators all the ammo they needed, because that kind of showed that they personally profited from the activity on the protocol, right? You had to stake the tokens in order to be a relayer, I believe, and then the more tokens you staked, the higher the chance of being picked when a transaction went through the protocol, etc. So the tokenomics were designed to, pump the token and boost activity, etc. I mean, I farmed Torn back in the day, but
That's
again,
interesting.
I think if they had just built the protocol, left it alone, no token needed, anyone could use it, they probably wouldn't have ended up in this position. Perhaps. I mean, it's
I'm not sure about that. Like, I think the arguments were a little bit more were a little bit more geared towards seeing how centralized the management of the protocol was. So there was a look at how these developers were, in fact, there were a small group controlling development of this tool. And so that's kind of regardless of whether there's a token or not. I think that would have still been damning, the fact that these small group of developers made this tool and continued to impact the continued building continued building the protocol. And I think that would have happened regardless of the token. But I think you're right that having a token and more directly profiting from Tornado Cash just made things worse in the eyes of the DOJ. But I think, stepping back, I agree with Jeremy's sentiment that what was created here, the intent was a tool to provide privacy for blockchain transactions. Tornado Cash does is it's a mixer. Like it mixes transactions so that you can't tell where your tokens are coming from and going, and that's it. Like that's the functionality of this tool. And the fact that it's permissionless means that, of course, anyone can use it. And the US is concerned that North Korea was using Tornado Cash, and they have data to support that they actually were. And so that's kind of the crux of the matter. North Korea, being a sanctioned country, was using Tornado Cash, and so the US thought that gave them enough kind of reason to step in and stop this. But in the end, it's not like Tornado Cash went marketing their app to North Korean hackers, being like, hey, launder your money here. They weren't promoting it as, hey, like, here's this handy money laundering tool that you guys can use. It's so it wasn't built for that purpose. It was built so that people transacting with crypto and on the Ethereum network could do so more privately. And so, it's like there's so many analogies. It's like, okay, do you charge a knife maker because somebody can use that knife to murder someone? Of course not. And so, these guys were writing code. They were making a tool. So I think just like, that's maybe simplifying things too much, but in the core, that's what this is about. So yeah, it's kind of disconcerting that it's come to this.
I think
or just like, yeah, I totally agree, but I do think, like, to the point that yes, there are other ways to launder money. It's just problematic that the service works really well for money laundering. Like, I agree that it's a tool, but I can see from a regulatory standpoint that it's like people are obviously, we've seen hacks and people go through Tornado Cash. Like, that is how they escape from hacks. So I think you're totally right, Cami, but I feel like there's just ways where, and I just am not enough of an expert, and this is like a deep dive, maybe even a research project of how do you reckon with the fact that this tool is used by hackers frequently post hack, and I don't have an answer. So it's a thorny issue.
I think
Jeremy said, right? Like, cash is used by drug dealers. Cash is used by regular folk too. So how do you draw the line?
I agree, but I'm just saying, like, this is obviously, it's proving useful, and whether it should be caught up and prosecuted in the way that, like, cash is also, like, maybe it's just that the attack surface for Tornado Cash is larger than it is for cash, right? It's harder to crack down, but I just want to hackers use Tornado Cash all the time. It's very useful. It's very useful.
Yeah,
but I've been seeing, like, in Zach's threads, like, and other research reports as well, like, they've been kind of matching Tornado inflows and outflows somehow. Probably because liquidity is a lot lower now than it was before the sanctions, right? So you're hiding in a smaller pool, maybe makes it easier. But it's still such an inefficient way to launder money, because you still need to off-ramp that crypto into a bank or something, right? Which in itself is a challenge if you're talking about hundreds of millions.
I mean, 10 years ago, we saw drug cartels using the Bank of America to launder money. They didn't shut them down. They didn't throw anyone in jail. They didn't do any of this type of action. You know what I mean? This type of thing has been going along in the traditional finance industry since time out of mind. So why is it that Tornado Cash gets nailed? Well, when you compare this type of activity to the other traditional finance activities, you've got these centralized financial houses, and these types of activities are happening not by virtue of the fact that there is this tool that creates a lack of transparency, but it's just the opacity of their reporting, right? So there's a gap in the reporting stack. That's something that these agencies can just slap you on the wrist for non-compliance and say, hey, you better report it next time. Tornado Cash does not have a way to report. It is a tool that has completely built privacy into the technology stack. That is what they don't want. They don't want that, because if you use that, like the dollar, you have lost any means of reporting. And because they want to be watching large parts of money go around, they want to keep an eye on that kind of thing. Tornado Cash represents a threat to their means of governance. And this is my opinion.
No, that's very fair. And maybe the moderate degree, the moderate trackability that YYC was saying of a Tornado Cash and the blockchain, that you can still kind of see the inflows and the outflows, like, maybe is actually to the detriment of the founders.
Hackers.
Yeah, and of hackers too. Like, I mean, just like I just meant in terms of, like, regulatory attack service. I mean, we have to face up that, like, people are using Tornado Cash to launder money, and it's useful, but yeah, no, it's true. I mean, people use other.
But I think, like, the way to fight that, I don't think it should be shutting down Tornado Cash. Like, it should be trying to find who the hackers are through, like, the very tools that the blockchain offers. Like, using that level of transparency to track them down, catching them when they off ramp their crypto. There's, like, different ways of doing that.
Yeah.
Not, I don't think shutting down Tornado Cash is even the best way. Like other tornado mixers, or other crypto mixers will just come up. Like it's just like a bad way of dealing with this. It's a great point though. Like banks they help money launderers all the time. They're not shutting down banks. I mean, they're like fining them, right, for sure, but not shutting them down, not throwing the CEOs in jail.
Yeah, I mean, HSBC, they were doing blatant money laundering for drug cartels in South America, right? And what they paid a few $100 million, maybe, if that. And yeah, no one went to jail.
Yeah.
That's when they got caught, right? So imagine the amount of money that flowed through that institution prior to them being caught. Imagine how much it would have been if they didn't get caught.
Yeah, exactly.
Yeah. No.
All right. So
fair enough.
I think let's move to the next topic. But I think it's a really it's a disservice to everyone, the fact that these Tornado Cash developers are in jail, because I think it kind of it just dampens the innovation in the space, like I don't like in the US, in just in crypto in general, and it makes it harder for people to transact in a private way. Privacy shouldn't be criminalized. Writing code shouldn't be criminalized. Innovation shouldn't be criminalized. So it's a shame. That's my own opinion. But let's move to happier topics. Friend tech. So this is the latest fad, or maybe not a fad, but certainly the latest kind of hype in crypto. It's insane how quickly this app took off. Like in, I think, under 2 weeks, it just it became like the most used app on Ethereum. Like it was gaining more fees than Uniswap. It has over 100,000 users by some metrics. It's pretty crazy. So yeah, what do you guys think? Like why was this able to gain traction so quickly?
It's kind of a confluence of things, right? Here we have X, formerly Twitter, making it harder for people to send messages back and forth, right? And causing people to like buy a subscription to do so. And then there's this platform that shows up exclusively allowing you to send messages to individuals by buying a key to the chat room, right? And then there's this whole tokenomics side to it where people are pumping and dumping meme coins. Now you can do it with your friend, and then beyond that, there's just, I think, the massive speculation, and then the fact that they launch it on the base layer network, which has quite a bit of interest in it. I think those were all a perfect storm that made this thing take off.
Mm-hmm.
The incentives are really good for influencers, right? I mean, it's like if you have a solid following, you can, I don't know. I mean, they're not making that much, and most of the influencers, I don't know, like what they're making like 2 or 3 ETH off trading fees. I think like the top people made like 60K or something. So I mean, maybe actually not huge compared to what I estimate those people's net worths to be, but I think people also, it's like making money off your kind of reputation or social capital is probably particularly satisfying. Like.
Mm-hmm.
Like I'm this cool, so I have like, or I have so much to say that my opinion is so valued that I made so much money. I don't know. It's very different than like picking the right stock. It's like I would imagine it's much more gratifying in a certain way. So.
Yeah. So I mean, activity certainly picked up after Paradigm disclosed their investment,
mm-hmm.
right? Because everyone knows that Paradigm can design a good Ponzi.
Right.
We've seen with Blur, Art Gobblers, Oh,
Yeah.
art gobblers, my God. From 20 to I think like close to zero now. But
Yeah, I think I saw that at the very top of like NFTs or something. It was like down like 99 or something. Like really nice volatility there, gotta say.
yeah, so I mean, there's the weekly airdrop campaign. So I'm waiting to see how many points I get today.
Mhm.
Cami, you need to get more active.
I know.
Go
I got
share
on
some
it
love.
and then I just like I dropped it. Yeah. Need to be better at friend taking.
Well,
Um
we'll see how much you need to be better at it, though, because some of the projects ties to Cassetto, a former non-starter NFT project, have some people speculating that FriendTech may yet be another Ponzi scheme. And as YYC mentioned, that paradigm investment does not help that sentiment either.
but let's not throw around the word Ponzi scheme. Like,
Gotta be
Of
careful,
course
yeah.
not. Of course not. I'm just saying,
because like
there is
to
this
me, like Ponzi
contention.
scheme means like purposely scamming people, like using
Okay,
clients' money to pay the like other clients, and it's like this particular meaning that I don't think this. I mean,
perhaps
this is
I
not
poor
it,
choice of
but
words. Let me.
yeah, like it's the question is like is I mean, will this activity last? Like, is it sustainable, or will it die out because just like the tokenomics and are attractive for like a like short period of time?
I feel
The
like
But
Big
current,
Mike did the
the
same thing.
current meta is OnlyFans because they just rolled out support for pictures last night,
mhm.
and crypto being the demographics of crypto being what they are, not surprising to see the OnlyFans girls trending.
Makes sense.
Well, that type of activity has driven innovation before. We saw state channels rise up in some of these types of forums, correct? So, it's just kind of like necessity is being driven by that, or innovation is being driven by that, rather.
Yeah, it will be interesting to see whether this sticks around. I mean, to my memory, it feels like, yeah, this is maybe the farthest a social app has gone, or it just seems like, you hear about Lens, or I guess, there was like BitClout. I didn't use BitClout.
Neither did I.
Yeah, but it's gotten pretty far,
Yeah.
everyone, it dominated Twitter,
From a very like
yeah,
subjective perspective, to
yeah.
me, this has like better vibes than BitCloud. That's just completely subjective, like nothing, to base
On
that off.
the
Just like,
vibes analysis, yeah,
yes, the vibes analysis. I think this has better vibes than BitCloud. Um, I tried it out, and I think it's definitely still clunky. Like it's not like a regular app. Like you need to download it on your like phone's Safari browser and then pin it to the home page. And then there's like other clunky things, like sometimes it just like locks you out, and like there's like the spinning loading wheel for like half of the like interactions. Yeah, there's, I don't know, it's not like a super like finished product, but the fact that it's like a crypto app, it makes me kind of forgive that, because the UX UI is better than most crypto apps. Like there's no paying gas, there's no signing transactions, like it's just, it's, you just do the thing that you're supposed to do.
And the
And
reason
I
for that, though, is the custody thing, right? Like you give
Yeah.
them custody of your crypto, and they are managing those transactions on a central internal server, which
Mhm.
brings us up to the question: is this really a crypto app, or is this a crypto adjacent app that then sends, when you want to withdraw, endpoints to the blockchain? Which I don't know if we could really draw that same comparison there, right? And in so doing, would we say that this app then might have a possibility of having a great deal of more complexity and layers of interesting things that they could add to it by virtue of the fact that it's crypto adjacent rather than completely on chain for every single process, which would be costly?
Well, technically, it isn't custodying your assets. They do have your private key because they do generate a base wallet for each user, right? So every transaction you do is a blockchain transaction.
Right.
right?
But
So
there's
they
still
have your private key. You can export it. You can import it into MetaMask, which is what I've done. So I can like use FriendMex and stuff. But yeah, so it's not custody per se. But yeah, they can rug your funds if they want to because they do have access to private keys.
now
But
your
it's
keys.
interesting that it's this like middle ground where you actually you can actually withdraw your assets and use them elsewhere in this like composable manner that's so key to innovation in Web3 and DeFi. I mean, the fact that there's like now lending markets against like wrapped keys, it's that's the thing where DeFi excels, just like financializing everything. I think the just like the interaction was super interesting. The fact that you buy and sell friends shares. I mean, if nothing else, it's just like an interesting step uh, forward, or at least sideways, in like social media interactions. Like it's something that I hadn't experienced before. And yeah, I think like these private chats with shareholders have like their own different dynamic than just tweeting publicly or like posting on a Facebook wall. It's just like, yeah, like a completely new way of using social media that's at least interesting, at least worth trying. And maybe it's not where social fi or whatever, like crypto, social media, whatever this is, ends up. But I think it's a step forward. Like it's something that like future versions of this or like future developers will be able to learn from.
I think it's cool that most people with big accounts have their DMs closed on Telegram, Discord, Twitter, and stuff, right? But on this thing, you can't close them. Anyone can buy your key if you're willing to pay the price and send you that message. I think that in itself has its own value.
Yeah.
True.
Yeah.
Yeah, because obviously you have keys to a couple pretty big accounts, and you've been able to kind of talk in ways where maybe they wouldn't sift through the DMs, but they've been able to talk to you a little bit.
Yeah, exactly. It helped us for a story yesterday, right?
It did indeed.
We got a
Thank
comment, a quote for a story from through Friendtech.
Yep. Through a big investor, which who does have DMs closed, I believe. So
Interesting.
Kudos.
There you go.
Yeah. I know we were joking, Cami, on the print call that we need a Friendtech budget, to get
yeah.
bankroll us with like a couple 100,000, and we'll get great quotes,
Yeah.
See, yet another use case of this thing.
But we would never pay for quotes. That's silly.
No, we're not paying
Imposters.
But you do see activity already dying down, right?
I think so. But I mean, there was still such a big demand for this. I wouldn't be surprised to see it reiterated across a number of different projects. I wouldn't even be surprised to see some major projects saying, hey, we want to roll out some type of reward like this for individuals. We've already seen X doing it with dollar rewards for people that have a large amount of following on them, generating ad revenue for their project. So, I mean, I wouldn't be surprised to see this metric somehow turned into a verifiable, trackable, traceable, transparent on-chain process, right?
What do you mean?
Yeah. Like others could adopt this.
Like,
I mean, like
projects or like, I don't know what you're
I mean,
saying.
X, I could see X like saying, hey, this is open source, right? I wouldn't be surprised if Elon saw this flash in the pan and was like, hey, I want to replicate that on X. Let's do it. Let's run like a test run of it. And like, it's not the first time people have tried to do this. We saw it. Voice tried to come out many years back with EOS.io trying to roll out a like rewards-based platform that was a social media platform. We saw it with BitCloud, as you mentioned before, and some of those other types of projects that have done types of things like this. So it's interesting.
Yeah. I mean, people have been trying token-gated communication for a long time. Like earn.com, Balaji started it before Coinbase acquired it in 2018. So it is interesting. I mean, I feel like almost like journalists, we get our inbox absolutely hammered every morning. And it's like, if we, I don't know, it could be like a source of revenue for news organizations and be like, look, we'll at least read and respond. If you pay us $5 and then we'll read your email.
I don't know about that. The way I was trained is, we write the news. No one pays us, and we don't pay them. We write the news. We write the news, and like you want to start adding money into the situation. It's called yellow dog journalism. It's payola. We don't do that.
Yeah.
Maybe it's just about like ensuring that we are reading the email. It doesn't mean that we'll cover the news.
Yeah.
Well, we have an editorial email that people can send to, and I
Yeah,
guarantee you, I read every one of those.
Jesus, I don't.
I do.
It's tough.
All right.
But yeah, I mean, the broader point is that this at least opens the door for different, business models or like types of interactions within apps. So we'll see where this goes. Now moving on, and somewhat related, maybe is this how like Ethereum layer 2s are gaining traction, with throughput hitting record highs. And I think, I mean, is this like mostly due to front tech on Base?
Not particularly. I'd say it is definitely a big contributor because we saw a lot of transactions on Base, but we've also seen ZK Sync era continues to see a lot of activity. People are betting on the airdrop, and I think as markets continue to range, and we're not really seeing much bullish action across tokens, people are focusing their efforts on farming these potential airdrops, whether it's ZK Sync or Layer 0. Linea is also picking up traction. So these are all a piece of the pie. And I believe we're at a scaling factor of 5x now, which means that L2s are basically processing 5 times as many transactions as mainnet. So I saw a few tweets over the last few days about how we might end up with hundreds or even thousands of roll-ups down the line, and what would such an ecosystem look like? Everyone's posting data to Ethereum, but what does it mean for things like liquidity? Are you going to have crazy fragmentation across all these roll-ups, or how's that going to be solved? But
people are working on that, right?
Sorry.
Oh, I just meant people are working. Sorry, I didn't mean to interrupt you. But just people are working on, I think, liquidity across L2s, right? Like interoperability in terms of there might be separate layer 2s, but there might be a way to share liquidity. I'm not sure, but I'm pretty sure.
I'm actually looking at a project I haven't read into it yet, but it's called ZK Link. So I think the name implies that it's going to link a bunch of ZKs. So
yeah, I'm sure that's coming. Anyways.
Yeah, I think so. But that was Jesse Pollock's theory on the podcast that I think we published this week. So Jesse is the lead of developer of Base, and I asked him what's going to happen with all these L2s, and that was his prediction, that it's going to be many roll-ups that are going to be making up the ecosystem. Like, it's not going to be about one ruling or winning over the rest. And he does see kind of a technical solution to bridge all liquidity across these roll-ups. But it's something that's kind of pretty theoretical at this point. It's like people are betting that there will be a seamless way to do that, and for now they'll just keep launching roll-ups, hoping that this happens down the line.
Because it's not just layer 2s, right? Now you have the layer 3 concept of app chains, and I mean app chains which do their own thing and have their own liquidity, like DYDX. Sure,
Mhm.
a standalone app doesn't need really liquidity or to rely on anything else. So for them, it makes sense. But running like Uniswap, for example, running on its own app chain might be,
Yeah.
Because the tokens that are traded on it probably are spread all across the ecosystem, right? So
Mhm.
Yeah.
it'll be interesting to see how that evolves.
Yeah.
Yeah. That'll be super interesting.
And speaking of Uniswap, really interesting story on Uniswap volume surpassing Coinbase so far this year. It's pretty crazy, especially with how the market has been. We had that video out saying is DeFi dead? I guess not.
Yeah.
Yeah. So not surprising to see this actually. And before we say that DeFi is killing CeFi, let's not forget that Binance is still 10 times bigger than both of these combined.
Mm.
So, but this is, I think, kind of a recap of this year, because Uniswap has benefited from meme coins, because you can't trade those on centralized exchanges, right? So it's all on Uniswap essentially. Whereas major tokens haven't really gone anywhere. I mean, they started off with a rally into the merge, not the merge, sorry, into Shanghai, and then we've kind of tapered off back into the summer, right? So major tokens that would be listed on exchanges like Coinbase haven't really seen much traction, whereas Uniswap, like I said, has been, let's say, the major beneficiary of meme coin trading.
Interesting.
That's fair enough. I hadn't thought that.
Yep.
Yeah. But
Cool.
meme coin trading, I mean, that's pretty much died down, right? Or, I mean,
Not really. I'd say. I mean, Pepe is kind of facing its own challenges today with the multi-sig apparently having dump tokens, but there are new ones popping up every day. Still, there's
People
the
are
one
still
with
trying to run it. Yeah.
what's it? Harry Potter, Bitcoin, something, right? The ticker is Bitcoin.
Are you talking
then-
about Harry Potter, Sonic Obama, Emu?
Yeah.
Everybody knows about Harry Potter, Sonic Obama, Emu.
So
Yeah.
I mean, the narratives have changed. We had a run of these Telegram bot tokens, right? That's a story that Owen's working on. And then we had a run in AI-based tokens. And so it feels like the narratives have kind of compressed and they die off within a few days. But meme coin trading is alive and well, I'd say.
Yeah. Yeah, it'll be interesting to see. I mean, yeah, if / when the market comes back. I mean, I don't know. I mean, is the L1 trade finally over? That was so dominant.
yeah.
Yeah, I just wonder what I don't know. I mean, I would like it to be apps, like, I mean, and the tokens for apps. If we have to have kind of a frenetic bull run, it would be nice if it was like at least a friend tech token or something. So,
Yeah, you're right.
yeah, we'll see where it goes. But
We'll see. Yeah. I'll tell you what, though, kind of moving perhaps into our next stories in the DeFi ecosystem, the new meta might be liquid staking tokens. Now, Aegon Layer opened up, I think, within 2 hours. They pulled in $160 million of deposits while they temporarily unpaused the protocol to allow individuals to stake their stake ETH, their Coinbase wrapped ETH, or anything else that the protocol supports. Lido took in this mostly on the lead in this. The Lido boards were basically the ones that ticked them over the edge in terms of hitting their limits. Aegon Layer has, if you're not familiar with it, allows you to take your staked ETH assets, like on Coinbase or your native staked ETH or wherever you've got your staked ETH, and then stake it into the Aegon Layer so that you can secure other types of protocols that don't have an authentication that's based on any type of proof of stake. And then for that, you get returns. Now, 2/3 of their protocol aren't open up. That includes operators and services that align with this protocol. But in the meantime, they are allowing individuals to stake. Another service on top of the Aegon Layer, Stater Labs, that we spoke to last week during our broadcast, is allowing individuals to stake into their smart contract and get a liquid restaked token. Now, this liquid restaked token would be exposing you to your staked Ether, your yield, your Aegon layer yield, and then allow you to in turn play in the DeFi marketplace, trade the token for instant liquidity, or provide some sort of other type of yield if you wanted to stake it again. We'll see what types of services and products come up above this, but liquid staking has become something that I think all of our big friend YYC here is very familiar with, in terms of trying to maximize your yield across protocols by exposing yourself to many different leverage points. Aegon Layer itself has become wildly popular since it proposed its liquid staking things. Even Vitalik Buterin had something to say about it, although he did warn when he spoke of this type of protocol that we need to be cautious on how we leverage these types of things in terms of the other networks that we're applying them to, so that individuals don't enter positions that put them at risk while staking, in terms of like slashing conditions and malicious action. So that's quite an interesting thing. If you guys have some thoughts on Aegon Layer, I'd love to hear them.
I mean, this has been like, I think one of the most one of the biggest innovations we've seen this year. This like restaking concept. We have a podcast with the Eigenlayer founder for listeners to check out and go deeper in the subject. But yeah, I mean, it's all about maximizing yield, and Eigenlayer and other restaking protocols allow you to do that. And yeah, it'll be interesting to see what risks this adds to the ecosystem as well. Like Vitalik was pointing out, that he doesn't want the kind of that he doesn't want Ethereum to be the to have to bail out projects restaking on top of Ethereum. Like that's the risk that he was seeing. So like he doesn't want like a too big to fail scenario where something really bad happens to a project that's restaking using like restaked ETH, and then like Ethereum is supposed to bail them out. So that's just like an interesting hypothetical scenario that could happen in this case. But I mean, in the meantime, this is just another tool for DeFi users to leverage and to make sure that they're using their ETH in the most efficient way.
Yeah, and we'll see. I mean, I think once the service is launched, right? I mean, that's going to happen maybe by the end of the year. So I think that we'll start to learn more. Right now, people are just jamming their ETH into that contract. Yeah, which I mean, good for them. I mean, it's insane how popular it is, right? Like, I mean, these things, it's like open for like an hour. So yeah, but yeah, I think once the services go on, I think Dan Elitzer of Nascent, the venture firm, he was concerned too, in that like he kind of said, speaking about what you're saying, Cami, that there are going to be some financial incentives that are going to be hard to say no to, in terms of, if people are offering extra basis points for securing a service and it gets really large. I mean, there might be, the game theory might end up in a place where that we might not want it to, and might get into those dangerous, too big to fail situations. So that'll be something to watch.
Yeah, for sure.
Yeah.
Moving on to the next story, Jeremy.
Yes. I've looked into this. Center Consortium was an entity that was jointly operated by Circle and Coinbase on the premise that there would be some regulatory issues by being connected directly to the entity that was issuing a stablecoin. However, Coinbase has decided to dissolve that entity and purchased an equity stake in Circle to continue operating to some extent. Now, the idea here is that Coinbase will dissolve Center and then restructure in order to continue to issue the coin, because they no longer perceive that there is going to be any type of regulatory pressure to have a secondary agency managing it. If you look at the downtrend in the USDC, we've seen that I think it's, what is it, down 53% since it crashed, peaking at a point of 56 billion, sorry, in last July, based on some statistics we saw from CoinGecko. So, revamping and relaunching this, we'll see if it revitalizes the ecosystem around USDC, but that remains to be seen. There are a number of different blockchains that they're talking about launching USDC on, although they have not announced exactly which ones they are. But I think that they're talking about doing that sometime in October, between September and October. So if more blockchains are utilizing USDC, it might add to the network volume, like to the total value locked in the stable coin, and perhaps thwart some of these downtrends.
We shall see.
Indeed.
It's crazy to me how quickly just like USDC market cap has declined, and how quickly trust can be shaken. This obviously came after the depeg that USDC had after the banking issues. I think it's also compounded with just like a less active market. Like there's less activity, so people are demanding less stable coins. But I think maybe one of the biggest triggers for the downtrend was the banking issues in the US, and I think it's been really hard for it to come back from that. So I mean, just like a reminder of how quickly trust is lost.
And even though the lawsuits kind of back and forth in terms of who has an edge and who doesn't, just the existence of legal pressure does not help investor sentiment in terms of wanting to get into any type of crypto situation when they know that there may be a ruling that affects, how their assets are deployed and in terms of their compliance levels. So,
yep. Okay, and then moving on to Yuga.
This is, of course, the royalty saga in NFTs has been a hot topic, I'd say, for a year and a half now. Ever since basically SudoSwap, I think, was the first one that came in and kind of just threw a grenade into what was otherwise quite a lovely, a market for creators who were just milking royalties left and right. They had reached, I mean, even now you have projects with 10% royalties and stuff, which is absolutely crazy. If you that means if you're buying and selling something, that's a 20% spread that you have to eat as a trader, right? So obviously something had to be done. So SudoSwap came in with this AMM and said, okay, no royalties, just go trade them like shit coins, essentially. And that kicked off various moves from other exchanges other marketplaces that came out. LooksRare came in, tried something. Magic Eden did, and then OpenSea. Until for the longest time, they were trying to stick with the existing status quo. Didn't want to make any changes. And then Blur came along, and with zero fees and no royalties when they first launched, and they just ate OpenSea's lunch. Everyone moved to Blur. Like OpenSea, I think it took a couple of weeks for Blur to basically unseat OpenSea by volume, right? And Blur kept shipping new features, trade bids, lending, the airdrop program. OpenSea, of course, no token ever. All the fat fees go to the VCs. So. Yeah. I think the NFT community as well, at least at the beginning, rallied around Blur because we've been wanting like a native marketplace to spring up, which would kind of reward holders and, give an airdrop, etc. And Blur ticked all those boxes. And I think now we've seen basically the end of this story where OpenSea is saying, you know what, we tried, but clearly the space as a whole is moving towards an optional royalty model, so we can't continue to lose market share, right? I'm sure the board is panicking after the performance that they're seeing because I haven't looked at the Dune dashboard lately that looks at all the marketplaces, but I'm pretty sure most of the trades go through either OpenSea Pro, which had no fees, but they're hiking those as well, or Blur, because people are still farming the airdrop, etc. And it just makes sense, because if OpenSea is going to give you nothing, you might as well use Blur, right? Even if the token's worth a lot less than it was.
Blur
It's
also
pretty-
looks way cooler.
It's pretty ironic. Like, so the whole narrative around NFTs was that, hey, like, this is a new technology that allows creators to interact directly with their communities, sell their art or their creations directly, bypass all the record labels and art galleries who are taking huge fees, take control over your work. Like, that was a whole narrative of NFTs. And now they're like the very marketplaces that were supposed to house them and like allow this direct interaction are screwing them over.
This kind of
Pretty
goes
sad.
back to the idea that if you rely on like this entity, a central processing provider or a platform to iterate this type of royalty structure, then and you're not using an on-chain structure, for instance, if it's not built into the smart contract that royalties will go to somebody at every sale, then you basically are relying on somebody to build it into their UX. And if OpenSea doesn't have an incentive to do that, then they won't. Yeah. So code is again law here, right? If you people really want to have this type of thing, which drove the ethos of NFTs to where it was, where to its current levels, which is like, hey, give creators a way to continue to see benefit from their art being proliferated, then creators will need to turn to services or become savvy enough to generate the smart contracts to mint their works that will enforce these types of royalties, so that platforms like OpenSea cannot say, hey, we're going to trade this without royalties anymore. They will not have an option.
That's a good point.
Yeah, I do. No, it's a great point, because I still don't quite understand. I did an interview a long time ago, but it's I just like, why can't you, if Ethereum is a Turing complete machine, why don't people just bake those fees into on the smart contract layer? I don't
because not everybody knows how to code in Solidity, and
but it's like they're bespoke off the shelf code. I mean, like Manifold like allows tons of people to do that without needing to touch code. I mean, people can deploy NFTs
also, like, if there's a market for it, like, I'm sure like so many NFT artists will want that in the smart contract. There's a clear market for that. So it's just about like a developer being like, hey, I know how to do this, like, I don't know, charge a small fee or whatever, like, I'll build this for you. I'm sure there's ways.
Oh, absolutely. And I think that necessity is the mother of invention, so we're going to see it manifest very soon.
Yeah.
I mean, you have ERC20 tokens with built-in taxes, right? So you can't transfer those tokens without taxes. But with NFTs, the problem is, what if you want to transfer something between your own wallets? Right? You need to maintain that functionality, right? But if you leave that window open, then someone could misuse that to avoid royalties, right? Essentially an OTC trade. So how do you enforce it at a contract level while also leaving some flexibility? I think that's a challenge, and that's probably why we haven't seen something that's already included in ERC21 or 721 or 1155.
Plus, you can wrap tokens into another token to avoid fees, right? So like, say I want to trade somebody a token, I don't want to pay a royalty on it. Well, I've got this other token. I can just have that token wrapped into it and say, hey, buy this one. It has no royalty fees in the contract associated with it, and unwrap it and get the thing out of it. It's that simple. That's also the same reason that soulbound tokens don't exist, because anybody can get a soulbound token, wrap it into one of these other tokens, and transfer it to the new party. It's not soulbound. It doesn't exist. It's no such thing.
Yeah, so yeah, maybe it's not so simple, but I don't know. To me, it's like it feels like it should be done. Like it like it's something that should be figured out.
A lot of people came on the podcast, Cami. I know because I edited them or the transcripts, promoting the vision, which you're talking about. So
Yeah,
it'd be
right.
nice to see it happen. Yeah.
All right. So
That's
fine.
correct.
From the artist's perspective, I agree. Yes, creator monetization is important, recurring revenue and all that. Now let me look at it from a trader's perspective. Okay. What if a project is a rug, or like the team abandons the project? Do I still
Yeah.
need to pay them royalties on the way out, even though I'm selling at a loss? That seems like absolutely ridiculous to me.
Yeah.
Right? Plus, the spread that I mentioned leads to an inefficient market. You can't have a
Yeah.
20% spread across buying and selling and expect big money to come in and
Yeah.
buy these
Yeah.
things up.
Yeah.
So you have to balance the two sides, I think, which is
True.
liquidity and ease of trading with
Mhm.
creator monetization.
Yeah. No, that's a great point too.
Yeah. Yeah, so maybe I don't know, like creators just make their just make money on the primary sale, like on the mint, and then just give up
How art used
making
to be.
anything on secondary sales. I don't know.
I mean, like when I buy a Jackson Pollock from Jackson Pollock's, like, and he's still alive, right? And I buy it for whatever. And then like I turn around and sell it today for $60 million. I don't have to pay the Jackson Pollock Foundation a royalty fee because I own that painting. So this idea of like ownership and royalties being baked into the model, we really have to think about how markets are actually, real markets are iterating that and like see if it is something that is going to be sustainable in crypto. A lot of this stuff is brand new. And while there's billions of dollars driving it, it's because we are ready to test these things with money. And that is why there's a lot of volume behind them. We can't let that volume betray us into thinking that we had some viable thing just because a bunch of people poured their money in a hole.
Yeah,
But
and I
like,
think it depends on the project too, because,
Yeah.
for example, something that mints wants to be accessible and gives people low mint price, like a game or something, for example, like mint's really cheap and relies on revenue from royalties, to keep the game going. That makes sense. But when something mints out at 2, 3 ETH, like, not going to mention any collections, but there have been many recent ones. When you have a mint price of 1, 2, 3 ETH, you're raising 40, 50, $100 million. You don't need royalties. You should be able to build your product with that, with the money you have. So
Yeah.
I think there's a huge spectrum of, things, uses and projects to consider before saying, let's bake it into the contract and one size fits all.
Yeah.
True.
Yeah. I
I
think.
mean,
Yeah.
yeah, it's not one size fits all. It's like for some use cases, it should be there should be a baked-in royalty fee, and for others, no, it's just like one big sale, and then the secondary market doesn't have any fees. Like, yeah, it really does depend on the project.
But if you're like an established band and you want to take like 50 basis points on a trade, and you want to sell songs, like, I don't know.
Yeah, that's what I was
would
thinking.
be
Like,
cool with that. Yeah.
like bands actually do make royalties off whenever their song is played. So that does happen in the kind of Web2 like traditional market.
Yeah.
But is there a pervasive music network out there in the Web3 marketplace that lets people pay into the platform and then gives weighted distribution to bands based on the songs that get played in a token? Like, there isn't. And the reason
not on
for that,
streams yet.
yeah. Now that might be a model that, somebody decides, hey, I don't want to get a Pandora subscription for X amount of dollars. I want to go ahead and buy this Web3 subscription because we have a diverse enough library of music available there. But man, that old era of music, that those guys, the studios, they have the rights to like everything in history right now.
Mm-hmm.
Everything in history right now. The entire catalog of music is through their channels. So anything new that comes up, that might come through these types of crypto platforms. But as far as like the old guard, which is not going away anytime soon.
Yeah, it's true. It's true.
Yeah. All right, let's start wrapping up. We have a couple of stories left. This Parallel Prime token launch.
I can speed run it. So Parallel Prime is up major, at least as of last week. It was up. It pretty much doubled. Talked to DeFi Dad and a couple other people, and basically Parallel is right now a card game. There are a bunch of NFTs. It's kind of a new model because I think there's like millions of NFTs, which are cards at this point, and you play card game kind of like Pokemon or Magic the Gathering or Yu-Gi-Oh! And so then the Prime token is kind of at the center of it. I don't understand how it's used. I think you can make some money by winning games. But I mean, for me, what's exciting is just like another app that people actually like, right? I mean, that's what was exciting about Friend Tech. I mean, it feels like I'm just so tired of crypto being at the infrastructure stage. So it seems like if anyone is producing something crypto related that people like, that just like inherently, which has a crypto aspect, is great for me. So I don't know.
This is probably the first crypto native game, or one of the first that people are actually liking to play without considering the earning aspect of it, right?
Yeah.
Otherwise,
Axie and stuff were no fun to play at all. It was like a chore, literally. But you made a lot of money from the tokens, so you did it.
Right. Yeah, so I haven't played yet. I talked to DeFi Dad, and also I think the founders are really. I mean, at least according to DeFi Dad, he said they're very hardworking and ambitious. So just a tip of the cap from DeFi Dad to the people behind Parallel. So definitely something to watch as crypto moves forward, and hopefully we'll get some breakout apps at some point.
As someone with boxes and boxes full of Magic cards, looking forward to this one.
Yeah. Let us know what you think.
Nice. Okay, then Lido completing its final token unlock.
I wrote that one too. Basically, Dragonfly bought Lido last year over the counter. They bought 1% to fund Lido through the potential bear market. Turned out to be a smart call, and those just unlocked today. I'm not sure exactly when today. So basically all of the Lido is on the market now, and potential for a bullish signal, and that unlike a world coin, which is going to be unlocking over the next 5 years, Lido is all out on the market, so you're not getting dumped on necessarily by VCs or investors or team members at this point. So maybe overall, I would say a bullish signal.
Interesting.
Yeah.
And then finally, this just came in. So I haven't had a chance to read up on this, but so there's a tax proposal that lets miners off the hook and snares some dexes. I guess this IRS proposal for crypto tax reporting, just a proposal for now, but something to watch. Anyone can kind of give a quick summary?
It looks like it's a proposal right now. There's going to be hearings on it. There's going to be some deliberations on it. This will likely be augmented and modified. But in the meantime, the documentation provided seems to give some rudimentary answers to some questions that have been plaguing the industry for years around whether or not decentralized finance platforms and miners will need to submit personal data from their users. And it also provides some loose definitions around brokers for the crypto industry. Again, that is subject to change as we see hearings and stuff come forward for this. It does exempt miners from the tax rules, which is significant, but it does hold certain decentralized finance platforms, which it says that they will also not be. So, we'll see. And it does not mention which decentralized exchanges in any of the coverage that I've seen here. So I could not tell you that. But what I could say is it's probably Uniswap. And I'm saying that just because Uniswap is the largest one. And so for them to target something other than Uniswap, to me, would be silly, because if you wanted to set a precedent, you would target the largest fish in the pond, so to speak, that you can.
Okay, so we'll
Yeah.
we'll see, but in any case, just more clarity is better, because there's just still so many questions on actually, like, how crypto should be treated by tax authorities, and we did have a few tax experts here on this show a few weeks back. So yeah, recommend looking at that, as because they answered a lot of kind of the biggest questions around how to treat your crypto taxes wise. But anyways, we'll be keeping track of how this proposal moves. And with that, we've come to the end of the biggest headlines of the week. Thanks everyone for joining. Thanks YYC, Owen, and Jeremy. And yeah, wish you all a great weekend, and see you next week.